Rajesh Kothari is with us, Managing Director at Alpha Accurate Advisors. Rajesh, great to have you with us here.
Thank you.
Thank you for your time. We were discussing what a fantastic bull market this still is, right?
Yeah.
I'm very much in the thick of it.
Yes.
And I was just reading out a long list of names which in September have gone up 30, 40, 50%.
True.
Where are you at? Fully invested? With the same kind of, just your stance right now.
Yeah, see, I think, one thing is very clear. Whatever is happened in last 2-3 years, there is a lot of, I would say, all categories of stocks have gone up, irrespective of how good or bad the management is, how good or bad the governance is, how good or bad the balance sheet is, correct? I think next 12, 18, 24 months will be probably the years of the alpha managers. This will be the years where there will be differentiation between good and bad. There will be differentiation between good governance and bad governance. And very importantly, the sustainability of the growth. The companies who have a resilience, who have demonstrated the resilience, those will be rewarded significantly better compared to just narratives. I think last 18 months are more of narratives. Correct? Now it is a time to execution, to prove that narrative is right or wrong. Correct? So I think so. Our entire theme, if you ask me, is that be bullish, but be prudent. Means gaadi chalana hai, but seatbelt pehen ke chalana hai.
But do you think we will see a pause in many stocks? Just time correction, as you say, they will wait for execution. So when you're waiting, you're not moving. So then...
Not bad about it if that happens. Some time correction, some price correction is always welcome for any structural bull market. But market is not going to wait. If the growth is going to be delivered, then those stocks will be rewarded. But there are many companies where growth probably may not come. In fact, if you see last 3 months, there are many stocks which are down 35% from its 52-week high.
Correct.
Yeah.
Correct?
I'm going to put that list out.
But the narratives were very strong in many of such stocks. But those narratives now needs to be executed for those stocks to go back again.
So Rajesh, which are the sectors which we're going to avoid purely from a narrative point of view? We saw big storytelling, but the numbers are not there. Which are the few sectors that you're going to avoid now?
See, I think it will be more of a bottom-up rather than sectoral call. It will be more of a stock-specific call. Okay. So let me, for example, tell you, there are about 1,400, there are 5,000 listed companies in India. But only 800 companies makes 100 crores plus reported net profit after tax.
Right.
And if you look at 1,000 crores plus market cap, there are 1,400 companies. Of that, there are only 240 companies, a good universe of 240 companies, which delivered 18% compounded profit growth for last 10 years. Right. And in every sector, there are winners and losers. Right. So say, for example, one of a portfolio company, please put a disclaimer because now we are talking about some stocks, like, Uno Minda. Now, this Uno Minda has grown by 30-35% compounded for last 10 years. It's the fastest growing auto ancillary company in the entire auto space, auto plus auto ancillary. If you look at two-wheeler, look at TVS CAGR of profit growth. Versus say number 1 or number 2. Significantly far ahead. Correct? And
but it's been rewarded also, right? TVS has been rewarded. It's been the best performing.
No, but there are even others are also rewarded. That's what I'm trying to say.
Sure.
The last 3 years, whether your profit growth is 10% or 20%, everybody is rewarded.
Right. Now the differentiation will come.
That's what I'm trying to say.
So while I know that it's going to be very, stock specific, in general, which could be the theme or the sector that at least for the next 3 to 4 years can keep delivering at least this 20% CAGR because you're coming at very lofty valuations and all probably.
A good question. I think the first theme will remain the capital goods. But within CapEx, we would have data center, the electrification, the robotics and smart technologies. Those will be significantly high growth.
But so we don't have too many pure players. That's the problem, right?
You have 4 players. Globally, there are 4 companies. In India also, all those 4 multinationals are present. They are proxy for this data center. Because if you want to build one data center, 40% of it goes for the electrification. So it means transformers and related. So that's number 1. Number 2, if you look at the renewable energy growth, it's significantly going to outpace the thermal energy growth. And there are players who are catering to specifics within that each of that pocket. So that can be the second opportunity. Third opportunity can be auto ancillary. Means more sensors, more seat belts, more airbags. So auto industry growth may be 7-8%. But if you are into say airbags, then from 2 airbags now we have 4 to 6 to 8. Correct? So those will be faster growing.
Rajesh, since you mentioned renewables, I have to ask you about this, right? One of the developments this week was that finally the NTPC green IPO is getting the green nod. They're going ahead with the DRHP process. Here is an IPO coming from a state-run company in one of the hottest sectors, not just in India but globally. What would you expect?
No, I
mean, it's early days to talk about numbers, but in general, can NTPC Green be a good wealth creator?
Definitely it will, because what is going to happen is that as a state company, look at last 20 years, it has never happened in India. The state companies are thinking about unlocking the value and making a subsidiary, getting it listed with a separate ROC focus kind of thing, am I right? So I think it is an entire big lesson to be learned for the entire PSU sectors, that PSUs are also now behaving like a private sector. You have seen demerger from top 5 companies of the country, correct? But now it is happening even from the NTPC kind of company. So we do not own NTPC, but surely it is going to be a good value unlocker.
Rajesh, talk about names that you own in your portfolio. So there is no, I mean, as you said, this is, and we'll put the disclaimer out. The 2 sectors you mentioned, data center, transformers and electrification. What's the best play on that? And the other one was, I think you said renewables. You said robotics as well. So if you can just give us some examples.
So there are 1 or 2 common companies which are basically catering to data center plus AI plus the complex grid. So our largest holding, for example, portfolio is Hitachi Energy. It's our largest holding in a portfolio, across portfolio. So there are only again 4 or 5 companies in the world what they can do. Correct? Not many companies. Probably out of every 10 metros, 7 metros are powered by Hitachi Energy.
Oh, wow.
So if you see more fast speed trains, if you see more metros, if you see more renewable complex grid, HVDC project, earlier for every 2 years there was 1 HVDC project, 6,000 crores roughly. Now probably every year there will be 2 HVDC projects, 10,000 crores each, so 20,000 crores.
And
so
where is it trading at now in terms of valuations?
Depends which year you look at it.
26
Because
or
in capital goods what happens, you get order book first. It's like real estate, for example. The order book comes first. And then over a period of 3, 4, 5 years, it gets executed. So the important question here to ask is that how many years the growth can sustain? Can it sustain for 5 years? If answer to that question is yes, then these are the product companies, high technology, high moat. So it will continue to command at a premium valuation.
So that's one. Any other names to represent the themes you mentioned?
So for example, Siemens is also part of such names. And then of course there is a thermal side is also going to grow. So BHEL is also going to do well, but that's more on the thermal side because there is a shortage, is correct. Likewise, like auto ancillary, India. So likewise, there are so many fast growing segments within consumer. For example, the discretionary, like Trent is our largest holding for the last 4 years, doing extremely well. Now on one hand, people talk about consumer growing at 6%. On the other hand, this company is growing at 45%, even in 1Q. It grew by 50%, am I right? So I think there are enough profit pool opportunities. You need to be selective. And there are enough opportunities which can create such kind of wealth,
You mentioned PSUs just a while back. We were discussing NTPC. And I know that Nimesh worked a lot of numbers over the week because I guess that's one of the biggest questions, the big debate, whether the best of the PSU party is done and dusted or whether this is just a pause. What do you say,
Surabhi, as a lot of people have said, the leader of this bull market has been PSUs, right? And we've seen some cracks now happening in the last 3 months. The index is down 10%. Let me go to the wall and explain what it means and what to look forward to as far as the PSUs is concerned. So I'm putting the spotlight on PSUs largely because we've seen a big crack in the last 3 months in the PSC index. The index is down 10% in the since the recent highs. Index down 10%. Individual stocks in the PSU basket are down between 20 to 40%. And PSC index has lost nearly 4 lakh crores of market caps. That's a kind of correction we've seen in the PSU stocks in the last 1 quarter or so. Look at the big, these are the 3 reasons why you've seen a bit of correction in the PSU stocks. First being, there was over-exuberance and expensive valuations across the PSU basket. The second reason was over-ownership. We saw a lot of retail participations into the PSU stocks. And third, normally we've seen the launch of the thematic funds lead to a bit of a peak for that particular sector. These are the 3 reasons why we've seen a bit of correction in the PSU stocks. Now, look at the performance of the PSU stocks. Big cuts in the stocks like Cochin Shipyard, Garden Reach, BEML, Mazgaon Dock, Midani. HAL is down 26%, so is BEL. Of course, we need to put into context that these stocks have done phenomenally well over the last 3-4 years, and now we are seeing first signs of correction or a bit of pause in these companies. So these are the big losers. I've just taken more than 20% cuts. But within the PSU basket, there have been some winners as well in the recent months. HPCL is still in the green. NTPC is still flat to green. And stocks which are down less than 10%, Oil India, BPCL, Power Grid, IOC, they have not fallen much. And the key reason for this is the valuation has been a comfort for this particular basket, which has not done or fallen much in the last few months. So that's the kind of PSU basket. Now, as I said, the launch of thematic funds lead to a bit of a peak in the PSU stocks. We saw 3 defense funds in the last many months, and look at the performance of all the defense funds of late. HDFC Defense Fund is down 12%. Motilal Oswal Defense Funds is down 20% since the launch, and Aditya Birla Defense Funds is also down 5% in the last few months. So that's the kind of stocks which have done in the defense thing. But now the big question is, is the rally over for the PSUs? I spoke to 3 different sets of investors, and here's the first feedback. The first feedback is from a leading fund manager who had a big exposure in the PSU stocks. He believes that PSU as a theme is a decadal theme. He believes that value is going to outperform growth in this decade, and hence he's of the opinion that the bull market is not over in the PSU, but the easy phase of the bull run is largely over in the PSUs, and he believes from here on only quality PSUs which has got a unique business, they are likely to outperform. So that's a view from a fund manager. Second, I spoke to a veteran investor who's been a big bull of PSUs. Now, even he believes that typically, in a bull market, we see 30, 40, 50 percent kind of corrections in the bull market. So this is a typical bull market correction in the PSUs. However, the leadership is going to change, according to him. And now there will be new sets of companies which will take the mental leadership in the PSU basket. There are few sectors and stocks where the valuations were unreasonable, and hence we are seeing a bit of correction in those names. I've also taken a technical view that this is coming in from Rahul Sharma of GM Financial. He believes that the PSE index is now trading at a very crucial support at a 200 DMA, and the risk reward from a long-term perspective is attractive. But in the near term, a lot of the over-exuberant stocks like defense, he feels that defense stocks need to be sold even if there is a bounce back. So it's going to be very, very selective in the PSU basket. We've seen a bit of a correction, but the key question is, and the feedback seems to be that the leadership of this PSU is likely to change, so we need to look for unique businesses within the PSUs which can do well. If I can ask you if you've been holding any of the PSU names, and in general, what's your sense on the PSU stocks? What kind of leadership can come within the PSU basket?
No, I think, from our perspective, we are, neutral, whether it's PSU or private.
Sure.
Company should be good, governance should be good, balance sheet should be good, and there should be growth. Sure. So, for example, we own BHEL.
Okay.
Bharat Heavy Limited, correct? Right. Because thermal is going to be there is a shortage, and BHEL will be the biggest beneficiary of it, right? And likewise. So, I think, be it a shipyard, be it a railway, or I think all the themes are, of course, fantastic.